Hello students, welcome to quick revision marathon of P2 corporate and other laws. As I told you, this revision marathon is in three parts. Part 1, part 2, part 3. Part 1 is already available on our channel. Part 1 covers 5 topics. The average weightage of these 5 topics is 30 marks. Part 2 I will upload in 2 days. So currently I'm working on this part 2 marathon. So it will be available within 2 days. Now I'm uploading part 3 topics. So the topics covered in this marathon are LLP, FEMA, General Clauses Act, Interpretation of Statutes. And the minimum weightage of these chapters, if you look into LLP, minimum weightage 12 marks, FEMA 12 marks, General Clauses Act 8 marks, Interpretation of Statutes 8 marks. So average weightage of these 4 topics is 40 marks. And the duration of this video lecture, you can see it is 2 hours 10 minutes. And throughout this marathon quick revision of other laws, I considered, I prepared a summarized notes and I considered this document for marathon purpose. So I considered all the topics in ICS study material with respect to these 4 chapters and I summarized them into tabular form. This is like a fast track notes. And this document I used throughout this part 3 marathon. So we are going to upload this PDF document on our website. You can download it and you can read it. But the point is, without listening to this lecture, without listening to this marathon lecture, if you go through this document, you will not get maximum benefit. You will not get, 100% benefit. You will get benefit only once you just listen to the lecture and go through the document. After completion of each and every chapter, go through our question bank. Try to solve all the practical questions. So that's it. You'll get confidence on the upcoming exams. You can perform better. Getting it, everyone? And I'm telling you, this is just a quick revision marathon. If you want detailed revision marathon, same chapters are already available on Harsha YouTube channel. So under the playlist May 2024 Marathon CA Inter. So here you can see, first one Harsha YouTube channel. Same is also available on my channel too. So first one CA Harsha YouTube channel, May 2024 Marathon CA Inter. Here you can see other laws revision. So almost till today it got some 90,000 views approximately. So if you want detailed revision, you can watch this lecture. No sir, just summary itself is sufficient sir. We are okay with the concepts. We just need a summary revision sir. Then watch this lecture. Getting my point, students? So stay tuned, watch the marathon. All the best for your upcoming exams. Hello students, in this lecture I am revising interpretation of statutes, which is having a weightage of 8 to 10 marks in your examination. The highlight of this chapter is easy to understand but difficult to reproduce relevant content in the examination. As a result, many students, majority students are taking this chapter choice. But looking at the weightage, it's not advisable. So don't take this chapter choice. And I'm going to revise this chapter for the next 30 to 35 minutes. After revision, you will find the chapter is easy. Along with this lecture, I'm going to share with you PDF document. So just listen to the lecture and go through this PDF document. That's it. That's enough. Understand? See, in this chapter, we are having 5 topics. General topics like interpretation versus construction, interpretation of deeds. Next one, primary rules of interpretation, secondary rules of interpretation, internal aids to interpretation, external aids to interpretation. So definitely one question will come from rules of interpretation, another question will come from aids to interpretation, and last question, chance is there that question may come from general topics. I'm not ignoring any topic. I'm revising all the topics that are there in this chapter. Clear? So first one is definition of statute. The word statute and act of parliament both are synonymous. But in India, word statute is not popular. We are not using the word statute. We use word act, Companies Act, LLP Act, Indian Contract Act. Getting my point? Foreign Exchange Management Act, General Clauses Act. So in our India, act means act of parliament. And laws are of 2 types. Enacted law, unwritten law. Enacted law, that means a written law. Next one is unwritten law. A written law is a law that is codified in a single document. Whereas unwritten law, the law is not codified in a single document. In case of written law, A member of parliament or member of legislative assembly will introduce a proposal. We call it as a draft bill. Once that bill is approved by both the houses of parliament, then the bill is sent to president for his assent. Once president gives his assent to the bill, it becomes act and we follow act. Coming to unwritten laws, here the law is not codified in a single document, but law is based on purely on customary practices prevailing in that country and all previous judicial precedents, judicial decisions. So when when any matter is going to court, court will take customs, court will take usage, or court will take previous judiciary decisions in order to decide the present matter. But coming to in our India, a written laws, when a matter is going to the court, when a dispute is going to the court, so first primarily court will give reference to the act. Getting my point, students? So written law is based on legislation, whereas unwritten law is based on the customs, practices, usage, or judicial precedents. Understand? So Companies Act 2013, it's a written law. It governs companies and its operations in India. Next one, document, instrument, deed. See, there is a relationship between document, instrument, deed. Every deed is an instrument, but every instrument need not be a deed. Next one, every instrument is a document, but every document need not be a instrument, need not be an instrument. Let me tell you one more time. Every deed is an instrument. Every instrument is a document, but every document need not be an instrument. Every instrument need not be a deed. Understand? For example, this is a document. For example, in this is instrument and this is deed. Now you can understand it. You can understand it carefully. So first of all, document means, any matter either written or expressed or described on any substance. It may be a paper, or it may be a wood, or it may be a iron, metallic. Understand? Using letters, figures, marks for recording purposes. For example, this is one document, ma. Right now you are seeing on the screen, this is a document. And a statistical charts, it also becomes a document. That means, the means for recording the matter may be either letters or figures or marks or more than one of such means. And why we are recording that matter? We had an intention to use it present, or we may use it in future. So that is document. And a written document which is capable of creating rights and liabilities or obligations, then it becomes instrument. For example, promissory note. It creates rights and obligations. It creates right in favor of a payee, obligation in favor of, obligation on maker of the promissory note. He is liable on maturity date. Understand? Next one, an instrument which fulfills other requirements like, witness, a registration, then it becomes a deed. For example, property deed, sale deed. I'm the owner of this property. I want to sell this property. Now I'll register the transfer deed as per Transfer of Properties Act, and I'll give these documents to the buyer. Now buyer becomes owner of this property. Are you getting my point, students? So instrument, deed, the slight difference, the thin line of difference is, in instrument, if you find, registration, witness, all other statutory formalities, then it becomes a deed. So an instrument in writing affecting a legal disposition, often used interchangeably with instrument in India. Sima, all deeds are instruments, but not all instruments are deeds. Understand? Another example, a power of attorney may or may not qualify as a deed depending on its purpose. See, power of attorney is a document through which one person delegates his power, delegates his authority to another person. And this power of attorney, sometimes it is an instrument, sometimes it is a deed. How, sir? For example, I'm a owner of a big house property which is located in Chennai. Right now, I'm not residing in Chennai, I'm residing in Bangalore. Now, I authorized one person to sell that building and to complete all the registration formalities. Now, a power of attorney document which is given in favor of an agent to sell the property, to clear all the formalities, it becomes a deed. Whereas, power of attorney document executed for general purposes, like, executing bills of exchange, daily routine activities, then power of attorney becomes instrument. So depending on its usage, depending on its purpose, sometimes power of attorney is an instrument, sometimes power of attorney is a deed. Next one, ma. Yes, interpretation types, ma. Legal interpretation, doctrinal interpretation, literal interpretation, functional interpretation. I gave you examples here itself. So after completion of the lecture, Just reading this document, you will get clarity. You will get clear cut understanding about these types of interpretation. Legal interpretation, it's a binding interpretation based on actual rule of law. For example, company definition. If you take definition of company section 2 clause 20, company means company incorporated under Companies Act 2013 or previous companies law. Yes or no? So now, if any matter comes to the court regarding whether it is a company or not, just by applying the definition of company, we can simply decide whether it is a company or not. Suppose if you take LLP, it is not a company, it is just LLP. Why? Company should get incorporation under Companies Act. LLP will get incorporation under LLP Act. Getting my point, students? So authentic from legislature itself. For example, a tax law explicitly stating that corporate tax rates for financial year 24-25 will be 25%. So for companies, for corporates, the tax rate is 25%. Whatever is there in law, just read it, apply it. Legal interpretation. Next one, usual from other sources like customs or case laws. For example, the word separate legal entity was not defined in our Companies Act 2013. Now, separate legal entity is having various case laws like Solomon versus Solomon Company Limited. Getting my point? So, based on those judgments, we will get to know about separate legal entity. Company is separated from its owners. Act of company, company is liable. Act of members, members are liable. Act of company, members are not liable. Getting my point, students? So, legal interpretation subcategories to authentic, usual. Authentic from law itself. Usual from other sources like customs or case laws. Next one, doctrinal interpretation. Here we discover the real and true meaning of the statute. Real and true meaning of the statute. Best example, ultra vires. Whether the act of company is within its powers or beyond its powers. Getting my point? So grammatical, using ordinary language rules. Logical, going beyond words to find the intention of the legislature. See, this chapter is significant nowadays. The reason is law was implemented at one point of time. Law was enacted at one point of time, or it was drafted at one point of time, whereas it was read at another point of time. Law making is happening at one point of time, law reading is happening at another point of time. So to construct a bridge between these 2 points, this chapter will play a crucial role. This chapter will play a significant role. So, reducing the gap between the time of making the law and the time of reading the law. Understand? For example, if you take a grammatical example, when you study or when you read section 96, every company except one person company has to conduct one general meeting in every year. That means it is very clear AGM is applicable for all companies except one person companies. Except for one person companies, all other companies are required to conduct one general meeting in a year. In an year. Yes or no? I'm sorry, in a year. Now, using ordinary language rules, we are getting that interpretation. Now, logical, going beyond the words used in the law in order to find out the intention of the lawmaker. For example, flexibility in CSR compliance. Suppose current year, we are having an obligation to spend 2 crores on CSR activities, and we are able to spend only 1.9 crore. Some 10 lakhs amount was not spent. 10 lakhs was not spent. Now, strictly, we will not implement penal provisions. We will look into the matter. Why this 10 lakhs was not spent? So, reason is, they couldn't get sufficient time to spend this 10 lakhs. So, for a project which requires 2 crores, by the 31st March, they spend 1.9 crore. And if we provide some 5 days or 1 week time, they can easily spend remaining amount. So, here, we allow some flexibility. Ultimate objective, whether public is benefited with the objectives of, with the CSR activities of the company or not, we'll look into that matters. Understood? So simply 31st March use unspent some 10 lakhs amount. So straight away implementation of penal provisions will not happen. Literal interpretation, functional interpretation. Literal interpretation regards literal words as conclusive evidence of the law meaning. Example, AGM as strictly within the time frame specified in the Companies Act 2013. Every company has to conduct AGM within 6 months from the closure of financial year. Within 6 months from the closure of financial year. And the second time limit is time gap between 2 AGM shall not exceed 15 months. Okay, but I will go with only first time limit ma. So every company has to conduct one AGM within 6 months of closure of financial year. So just implement it. Whatever you read it, just interpret it as it is. That's it. Nothing to be added, nothing to be omitted. So within 6 months, conduct AGM. That's it. Functional interpretation goes beyond the letter of the law to find more satisfactory evidence of the legislature through content. For example, COVID pandemic came. COVID pandemic, social gatherings, meetings were completely prohibited. Now it is not possible to conduct AGM within 6 months, within 6 months of closure of financial year. Now what happened, that year, next 2 years, I think 3 years, total 3 years, MCA gave a clarification. The clarification is either you can conduct AGM physically or you can conduct general meetings over video teleconferencing also. And they extended general meeting deadlines. Yes, conduct general meeting by 31st December of the year. So every situation apply literal interpretation, but exceptional cases apply functional interpretation. Getting my point, students? See why we are having these many types of interpretation. One is, first you follow literal interpretation. If it is not giving desired results, then avoid applying literal interpretation, go with the other rules of interpretation. Getting my point, students? Next one, interpretation versus construction. See, interpretation, construction, both are synonymous to some extent, but both had different perspectives, different meanings after that point. See, for example, proxy, if you take section 3 or if you take section 105 proxy. Section 3, what section 3 is telling? A company may be formed for any lawful purpose. A company may be formed for lawful purpose. Here may, it's not mandatory, it's an optional. A lawful purpose. So that means, the readers may get second kind of interpretation like this. A company may be formed for also unlawful purpose. Getting my point? So if you apply interpretation, literal interpretation, it is not giving desired results. It is giving two meanings. One is desired meaning, other one is undesired meaning. So avoiding undesired meaning, getting desired meaning is all about construction. The process of determining the plain and intended meaning of the words in a statute. The process of drawing conclusions from a statute when the meaning of the words is ambiguous or unclear. Ambiguous, not clear, or unclear. So, we use construction in case of ambiguous words, unclear words. And we use interpretation if word is having only one meaning, and we can apply intended meaning. Getting my point, students? So approach literal meaning of the words used by the legislature, and construction goes beyond the literal words to understand the intent and applies it to the specific situations. Focus, under interpretation, main focus is letter, whereas under construction the main focus is spirit, intention of the lawmaker. Interpretation, just letters used in the law, whereas construction, intention of the lawmaker. Next, we had few examples, like interpretation. Director definition comes under interpretation, whereas shadow director comes under construction. Shadow director, he is not a director, but all other directors are listening to this fellow. Actually, I'm not the director, but one company is listening to me. Whatever I'm telling, do's and don'ts, that is following accordingly. I'm not a professional. I'm just providing advisors instructions based on which directors are following it carefully. Now I become a shadow director. So I'm also a promoter of the company. If you apply interpretation, I'm not a promoter, I'm not a director. But if you apply construction, I'm a promoter of the company, I'm a shadow director of the company. So accordingly, I will also get liabilities in case companies commit any mistakes, frauds, crimes. Next one, application. Interpretation, use the words used when word is in statute or clear, unambiguous. Whereas construction, word is not clear. And if you apply literal interpretation, the result may be undesired. Next one, judicial basis. Courts adhere to the plain meaning unless it leads to the absurdity, unless it leads to the illogical. If it is illogical, then courts will stop interpretation, courts will go with the construction. So this can be tested for 4 marks, interpretation versus construction. If you take previous attempts, 2 times this question was repeated. So 4 marks topic. Next one, primary rules, secondary rules. Very, 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 very simple to understand these rules. First, go with literal interpretation. If literal construction is not giving desired result because the words used in the statute are not clear, ambiguous, for example, then go with reasonable construction. Sir, there are two provisions in the statute and these two provisions are conflicting provisions, sir. In that case, we should provide harmony to avoid that conflict and we apply harmonious construction rule. Suppose, sir, one statute it is having a loophole, sir. To cover the loophole, we got Amendment Act, sir. We got Amendment Act. Now, to understand that Amendment Act, we apply mischief rule. Understood? And one rule is a beneficial to underprivileged section of people, sir. Underprivileged group of people, sir. So then apply beneficial construction. Next one, sometimes or can be understood as end. End can be understood as or. May can be understood as shall. Shall can be understood as may. This kind of interpretation is exceptional construction. Next one, rule of ujusdem generis. In a combination, in a statement, combination of words there. First one, special words or specific words followed with general words. Then general words always derive color from specific words. That is rule of ujusdem generis. So each and every rule is having its own priorities. First apply literal interpretation. Not possible. If there is any ambiguity, go with reasonable construction. Conflicting provisions, apply harmonious construction. Covering the loopholes in the old law, covering the mischiefs in the old law. If we got a new law, to understand that new law, apply mischief rule. Next one, benefits of the underprivileged section of people, apply beneficial construction. Or shall be understood as end shall be understood as or. These cases apply rule of exceptional construction. And specific words plus general words always derive its meaning from specific words. There apply rule of ujusdem generis. Now tell me, is it easy to remember the rules? So many students had a confusion, which rule to be applied in the given situation. What rule, which rule, when we should apply when we should apply. So this problem you can avoid just after listening these 2 minutes points. After listening to this last 2 minutes points, so you felt easy in understanding the rules, when to apply those rules. Getting my point? See, when you are interpreting any statute, first you need to apply primary rules. If primary rules are not giving desired result, then apply secondary rules. So let's see rules one by one. Rule of literal interpretation. Interpreting statute based on their plain, natural, grammatical meaning without hypothetical constructions. Nothing to add, nothing to omit. Whatever is there in the statute, reading it, applying it. It is literal construction. Understood? So simply shareholder excludes debenture holders. Shareholder excludes all other stakeholders. Shareholder means one who holds share. That's it. Stakeholders is a broader term. Stakeholders, yes, definitely two or more persons are covered under stakeholders. Whereas shareholders, a member of the company holding any share of the company, he becomes a shareholder. Understand? Latin maxim, remember this maxim and write this maxim in the examination so that you will get good marks. Plain words require no explanation. And interpret words as per the natural meaning unless ambiguity arises. And in case of ambiguity, suppose two types of interpretation possible: wider interpretation, narrow interpretation. Then don't apply narrow interpretation if it is defeating the legislation purpose. For that, we had one example, section 102, disclosing directors' interest in the proposed transactions. In the proposed resolutions, if directors or his relatives having any interest, they need to disclose that interest. Now here relatives means all the parties connected to the director, all the entities in which director is interested. Understood? So wider interpretation will satisfy the provisions, whereas narrow interpretation, it will defeat the legislation objective. Then don't apply narrow interpretation, apply wider interpretation. Everyone getting my point, students? Everyone. Next one, natural and grammatical meaning. Words should be understood in the ordinary sense unless leads to absurdity, inconsistency with statutes purpose. In Companies Act, we had a definition to the financial year. Now we need to apply financial year definition to the companies as per Companies Act only. Suppose company incorporated on or after 1st January, for them first financial year closure date is 31st March of following financial year. Now apply this definition for the first financial year of every company. That's it. Normally financial year means, it starts with 1st April, ends with 31st March. But for first financial year of the companies, for the companies with first financial year, for the companies and for first financial year, it need not be at 12 months. It may be for 15 months. Like if company is incorporated on 1st January 1st January 2025. Then financial year closure date is 31st March 2025. No, it's not 2025, it's 2026. Now here company is having a first financial year of how many months? 15 months. So apply those meanings which were given in the statute. Don't apply common meanings, don't apply general meanings. Technical words, for example, audit. So wherever in the Companies Act you see the word audit, it's a statutory audit. Of course, section 138 is dealt with internal audit. There alone audit means internal audit. But all cases audit means statutory audit, and it's a matter of statutory compliance. It's not just internal checks. So technical terms must be interpreted in the technical sense unless otherwise defined. Next one, ordinary words, technical words. We had examples, goods, every movable property, tangible items. Okay. Next one, debenture is having a technical meaning. Debenture is interpreted as long-term debt instrument and not equity, not shares. So debenture is not an equity share. Debenture is not a preference share. Debenture is a long-term debt, is interpreted as a long-term debt instrument. Next one, reasonable construction. A reasonable construction. Words in a statute should be interpreted to give a sensible, practicable meaning, avoiding absurdity or futility. Absurdity, simply, sometimes it is illogical. Sometimes it is illogical, interpreting words in its natural sense. So if you apply grammatical meaning, it will give illogical results. In that case, don't apply literal interpretation, just apply reasonable construction. Suppose section 105, if you take, proxy has no right to speak at meetings. Has no right to speak at meetings means what? Suppose he want to know the time, or he want to take one cup of tea, or he want to drink water. Now for those things, can he raise his voice? Yes. Then what is the meaning of has no right to speak? Has no right to speak means, in case of decision related matters, in case of resolution related matters, members can raise their objections, members can raise their doubts, but proxy has no right of asking such things. Getting my point? So now if you apply literal construction, it is giving two or more meanings. Few meanings are illogical, so don't apply literal construction, apply reasonable construction. Another meaning, section 3, a company may be formed for lawful purpose. Here may, you should understand, you should construe it as, you should construe it as a company may be formed for lawful purpose. That means a sole proprietor or a partnership or LLP may be formed for carrying business operations. So like that, you need to take interpretation. Company may be formed for lawful purpose. There, the word company is having options. The word company is having options, either company or partnership or LLP. So here you should not give options to the lawful purpose. Suppose a company may be formed for unlawful purpose also. That is wrong interpretation. So which rule is telling like that? Rule of reasonable construction. Understood? The law should be interpreted to fulfill its purpose rather than render it ineffective or meaningless. Primary principle, ordinary sense, statute should be understood grammatically in ordinary sense unless ambiguity, absurdity arises. Next one, golden rule of interpretation, it allows departure from grammatical meaning only when necessary to avoid illogical results, inconsistencies. Is it clear? Next, coming to the next rule, rule of harmonious construction. So in case of conflict between two or more provisions, just apply harmonious construction. And here you will find three kinds of words, like without prejudice to. Second one is subject to. Third one is notwithstanding. See, usage of any of these three words, it is providing harmony between two conflicting provisions. It is providing harmony between two conflicting provisions. For example, if you look at change of name. Section 13 is dealing with the matter of change of name, and section 4 is telling about restrictions on name, restrictions on selection of name. Name shall not be identical to or resemble with the name of existing company, and name shall not be undesirable in the opinion of central government, in the opinion of the government. And name shall not contain the phrases which creates a relationship with a government or government departments. So section 4, subsection 2, subsection 3 talking about restrictions on selection of the name. Section 13 is talking about change of the name. So now whenever you are changing the name, you should follow section 4 requirements. So resolving conflicts between section 13, section 4, yes, harmonious construction shall be applied. Getting my point, everyone? So here you can see notwithstanding, subject to clause, notwithstanding, without prejudice clause. So these 3 points are important for harmonious construction. Subject to, suppose name change subject to section 4 subsection 2 4 subsection 3. That means if you want to change the name, section 13 subsection 2 will apply. For alteration of name, section 13 is applicable. You all know that specific rule overrides general rule. So in case of alteration of name, section 13 will apply. But that alteration, if you want to select a new name, that new name should be subject to section 4 subsection 2 subsection 3. That means name selection, even in case of change of name, the name selection should be according to requirements of section 4 subject to. That means we are giving importance to second provision. Notwithstanding means we are giving importance to first provision and we are ignoring other provisions. Suppose private placement, notwithstanding overrides other conflicting sections. It overrides other conflicting sections. See, private placement, section 42 subsection 11 overrides subsection 9 subsection 10. So whatever is there in 9 10, they will apply. But since 9 and 10 applied, so 11 will not apply. That is not correct interpretation. 11 overrides 9 and 10. Understood? So in a situation where subsection 9, subsection 10 and subsection 11 applicable, first subsection 11 will apply. So what is there in 9 and 10? They are also applicable, but 11 overrides them. Without prejudice. That means, here both the provisions are operative. So provision 1, provision 2, without prejudice to provision 2, provision 1 will apply. That means what? Both provisions are operative. Both will get same importance. One will not restrict other. Provisions for company name registration are without prejudice to section 4 subsection 2, meaning both operate together without limiting the generality of either. So both apply. Notwithstanding, first one will apply. Subject to second one will apply. Suppose, in first provision, you saw subject to subsection 2, for example. Now, subsection 2 is important. Notwithstanding means, this provision is very important. Without prejudice to means both provisions operate equally. Next one, rule in Hedden's case. In rule in Hedden case, you have to remember these 4 questions. What was the law before the act? What was mischief or defect did the previous law have? And how the current law resolved that mischief, and what is the reason for the remedy? Just remember these 4 questions. You need to write these 4 questions as it is in your examination. And for understanding Hedden's case, best example is corporate social responsibility. Previous law is not providing statutory obligation on the companies regarding a CSR expenditure, CSR obligation. But present Companies Act 2013 is providing a statutory obligation on companies. It is fixing the criteria which companies are required to follow CSR. Section 135, which company should have CSR committee, and what is the definition of the net worth, what is the definition of the turnover, what is the definition of the net profit, and how much amount shall be spent on CSR activities. Everything was given precisely under section 135. So if ambiguity arises in interpreting CSR activities profits under section 135, courts would interpret the terms aligned with the purpose of promoting societal welfare, even if literal interpretation of the words might not support it fully. Next one, rule of beneficial construction. So here you'll find underprivileged or disadvantaged groups. So if a law is giving more benefits to these kind of groups, then apply that law in favor of underprivileged or disadvantaged groups. Suppose there are misstatements in the prospectus. Class action suit section 37 is there. So any group of persons or a single person can file a complaint against company, can lodge a complaint against company for claiming remedies. Now there, even a single member whose loss is maybe 10,000 rupees or 20,000 rupees, if he got that loss because of misstatements in the prospectus, he can lodge a complaint. So you are just a single person and your loss is just 10,000 rupees. Like that, we will not avoid those complaints. We will register those complaints. So minorities will get more privileges. Everyone will get privileges, but including minorities, we provide same thing. Next one, exceptional construction. Exceptional construction, 2 things are important. Usage of and or, mandatory, directory, may, must, shall. So these 3 points are important. Sometimes, word and should be understood as or. Sometimes the word or should be understood as a end. For example, if you take section 35 civil liability, section 35 civil liability, company, its present directors, proposed directors, promoters, expert, and person authorized issue of such prospectus will get punishment under section 35. Suppose expert is innocent. Expert is very innocent. He is unaware of the misstatements in the prospectus. He is okay with his report, and his report is not containing misstatements. He is unaware of the misstatements. He is innocent person, and he already gave withdrawal notice. He already filed withdrawal notice with ROC. Please exclude my name like that. Expert already gave a public notice. He filed an application with ROC for withdrawal of his consent. Now, here expert will not get any punishment under section 35, but usage of the word and, it refers that, all these people will get punishment. But the answer is, it is not like that. It's not like that. Suppose any innocent person, suppose any director, for example, any person authorized issue of prospectus, he believed expert statement and he gave consent to the prospectus. Later, that statement became, that expert report turned to be fraudulent report. It contained purely misstatements. Now, any person authorized issue of prospectus purely on the expert report, they will get exemption from section 35 punishment. That exemption is there. Now, usage of word and, do you think all will get punishment or only defaulting persons will get punishment? Defaulting persons. So, their word and shall be construed as or. And sometimes word or should be construed as end. Getting my point? Suppose maintenance of books of accounts. Maintenance of books of accounts. For example, MD or whole-time director in charge of finance responsible for maintenance of books of accounts. And both parties are defaulted. Both parties defaulted when complying section 128. Now, who will get punishment? Both parties will get punishment. They can't argue. MD or whole-time director, so you take punishment, or I will take punishment. It will not get like that. Here or shall be construed as end. So depending on the context, sometimes end becomes or becomes end. Next one, mandatory directory. For example, may, optional, must, shall, direct, mandatory. But if you take another example, that is, government audit, C&AG. Within 60 days, C&AG shall supplement the audit. There, within 60 days, C&AG is having a right to conduct supplementary audit. There, the word shall should be construed as may. There is no mandatory obligation on C&AG that within 60 days he should call for a supplementary audit. There is no mandatory thing. But if he wants to call for a supplementary audit, he is having such right he should exercise such right within 60 days. Within 60 days, he should exercise that right. Getting my point? Same meaning. Within 30 days of incorporation, board of directors shall appoint first auditor. If board fails, members shall appoint first auditor in the extraordinary general meeting. Now, board of directors are having a power to appoint a first auditor of the company. I'm talking about auditor only, right? Yes. But up to 30 days only, board of directors will get that right. Once 30 days over, board of directors, the power to appoint first auditor gets transmitted from directors to members. I'm getting my point, students? Everyone. In that context, up to 30 days, it is shall only. It is shall. Mandate. Next one. Rule of ejusdem generis. I told you. When there is a combination of words, specific words and general words always derive color from specific words. Understood? For example, if you take a Ashbury Railway Carriage Company, doctrine of ultravirus. So, engineering contracts, mechanical contracts, electrical contracts, general contracts. Now, the word general contracts will not cover finance contracts. So, here general contracts interpretation should be taken from first 3 contracts, that is engineering, electrical, mechanical. Simply, all incidental to these 3 contracts comes under general contracts. Getting my point, students? And in this rule, this point and this point is very, very important. These 2 points are very important. What are the conditions for application of ejusdem generis? Enumeration of specific words, the words from a class of category, and the category is not exhausted. General terms follow. No contrary legislative intent. So in a law, suppose rule of aegisdem generis is not applicable, like that they mentioned, then don't apply rule of aegisdem generis. So when these 5 conditions are satisfied, aegisdem generis is applicable. Aegisdem generis is applicable, and aegisdem generis is not applicable in these 4 cases. Preceding words or subsequent words are general. Suppose if you take a plant and machinery, and if you take a plant and trees. So here, general word is first and specific word is next. So in this case, machinery will not take interpretation from plant, or trees will not take interpretation from plant. Here plant interpretation will take from machines. So specific words plus general words, if combination is like this, then general words derive color from specific words. Accordingly, rule of aegisdem generis will apply. But the point is, if this combination is like this, general words plus specific words, then don't apply aegisdem generis, apply nocita ausocis. Next one, specific terms exhaust the category. That means, only specific words were given and complete list was given. General words, there is no chance at all. All special words were given. Then, no, just apply literal construction. No need to apply aegisdem generis. Specific terms are diverse in nature. Specific terms are diverse in nature. There is no relationship in these words. If there is any relationship, then general words will derive same relationship from the specific words. For example, I provide classes with respect to CA, CMA, CS, etc. That means that etc. covers only commerce courses. That etc. will not cover MBBS course, engineering course. Whereas specifically I'm mentioning like this, I'll provide coaching for CA, CMA, CS and all mathematics subjects in other courses. Now, these are diverse in nature. The terms, CA, CMA, CS is talking about commerce, and the other term is talking about mathematics. Either list is complete, or, the list, each and every term is defining, each and every term is having a distinct meaning. Then don't apply aegisdem generis. Express intent overrides rules. That's what, this is our 5th point in a conditions. Suppose, in a statute, the clear cut point was mentioned, rule of aegisdem generis is not applicable, then don't apply rule of aegisdem generis. Nocita ausocis, as I told you, general word plus special word. General word gets meaning from the next associated special word. For example, plant and machinery. Another example, fresh orange juice is not a fruit juice. When fruit juice, the word fruit juice is added in the context of manufactured beverages. So when fruit juice is added in the context of manufactured beverages, that fruit juices will not cover orange juice, banana juice. Getting my point? Fresh juice, ready. It's not ready made. They will make based on your order and they will serve it. It will have a limitation period. You can consume it within a day. But coming to fruit juices, they can be preserved for 3 months, 6 months, 9 months. Getting my point? Suppose all fruit juices will get taxation at under 12% GST, for example. So fruit juices excludes orange juices. So here fruit juices comes under the meaning of, the text is manufactured beverages. That text will apply. Next one, contemporaneous expositio. Here, this is applicable only to the old laws. It's not applicable to modern laws. It is applicable to old laws. Imagine Companies Act 2013 didn't came, and we are having Companies Act 1956. So when you are interpreting a provision belonging to Companies Act 1956, you have to consider the situations, customs, usage, practices prevailing during 1956 for better understanding of the provisions. Getting my point, students? So with respect to corporate governance, with respect to rules, which belongs to Companies Act 1956, apply 1956 year practices, customs, usages. Then you will get better interpretation. So that means, rule of doctrine of contemporaneous expositio. Here the main weightage is given to the customs practices prevailing when the law got enacted, not at the time, at present time. Next one, 2 rules completed, primary, secondary. Next we are left with internal aids, external aids. Internal aids, long title, short title. Title is important for identifying the statute. Long title, next one, preamble. Long title describes enactment scope, purposes used to ascertain legislative intent, but cannot override clear provisions of the act. And preamble also same meaning you will observe. But there is a difference between long title and preamble. I'll tell you. See, preamble Preamble. It explains scope, objective, purpose of the statute. It explains scope, objective, purpose of the statute. But coming to long title, it also describes scope and purpose. It also explains scope and purpose of the statute. The main difference is long title is a detailed explanation. It's a detailed description of the scope. Whereas preamble, it's a brief statement. Detailed explanation you'll find in long title. Brief statement explaining the reasons of this statute, explaining the reasons for enacting these laws, you'll find under preamble. But nowadays, to avoid confusion, I'm telling you, nowadays we are not having both the things, long title, preamble. We are having only one thing. Long title you'll find under short title, whereas preamble you'll find in the text. You'll find in the text of the law. See, to avoid confusion, I'm telling you one more time. Both had similar meanings. Whereas long title, it's a detailed explanation about the purpose of the law. Preamble, it's a brief statement regarding the reasons why this law was enacted. And we apply preamble in case of ambiguity of any words used in the provisions, used in the context. For example, if you take Companies Act, it is applicable only to the companies. It is only applicable to the companies. And even if you read the preamble of Companies Act, it is a law to consolidate, amend previous company laws. That means all previous companies, all existing companies which were incorporated under previous company laws are required to follow our Companies Act 2013. It's very clear with preamble. And if you take Negotiable Instruments Act preamble, so Negotiable Instruments Act is applicable only to the three instruments. What are the three instruments? Promissory note, bill of exchange, checks. But cannot override the clear provision. Suppose if you take Companies Act, it speaks about, section 464 speaks about illegal associations belonging to partnership firms. In case of partnership firm, when the number of partners exceed prescribed number, it becomes illegal association. Now, section 464 is talking about unregistered section 464 is talking about partnership firms, whereas preamble is talking about company. So when there is a conflict between preamble and provisions of the Companies Act, which one will prevail? Only provisions of Companies Act will prevail. This is very important point. This point can be asked for 2 marks, true or false question. So in case of conflict between preamble and provisions, which one we should follow? Provisions. In case of ambiguity in the provision, whether this provision is applicable to what kind of entities, then go with the preamble. So right now we are having only one. Previously we had long title, we had preamble. But ultimate objective of the both is same. Thin line of difference. Long title, detailed description of the actor. Preamble, brief statement about the reasons why this law was enacted. Heading and title. We are having chapter headings. Chapter 2, incorporation of company. Chapter 3, prospectus. Chapter 4, share capital and debentures. Right? So yes, we will also consider them while interpreting the statute. Marginal notes. In amendments acts, you will see in margins you will find the summary of these sections, but no case it will consider as an aid to construction. It is not considered as an aid to the construction. Definitional clauses. Section 2, if you see, all definitions we are having, and these definitions 3 types: restrictive, extensive, ambiguous. Take company definition. Company is a restrictive definition. Restrictive means here company means company incorporated under Companies Act 2013. Only an association which is incorporated under Companies Act 2013 or previous company laws becomes companies. That's it. Restrictive. Extensive. Take board of directors for example. Board of directors includes committee of directors, audit committee, CSR committee. All these committees comes under board of directors only. Next one, ambiguous definition. For example, related party you take. Related party will have a ambiguous meanings. Why? Because related party means not only my relatives but also the entities in which I'm related. Suppose I'm director of your company and I'm also director of another company. Now that another company becomes related party to your company because I'm interested in that company. My relatives become related party to the company, and my entities, entities in which I'm interested either as a director or as a member, all these entities also becomes related party to this company. So this is not clear-cut definition. It is it's like inclusive in nature. So definitions 3 types: restrictive, extensive, ambiguous. Remember examples for each one. Restrictive, company definition; extensive, board of directors; ambiguous, related party. Illustrations you will find within the statute. Proviso. For example, financial statements had 5 components: balance sheet, profit and loss account, cash flow statement, statement showing changes in equity, and notes to accounts. But this is not applicable to OPC. For OPC, cash flow statement is not there. For OPC, for small companies, cash flow statement is not there. Dormant companies, cash flow statement is not there. That means, proviso, it's an exception. It's an exception to the main provision. Explanation. Suppose you take associate company, for example, associate company, any company having significant influence in one company, then it becomes associate company. So significant influence means what? It was given under explanation. So for understanding significant influence, go with explanation. Schedules, part of the law, part of the act. Read statute as a whole. Read statute as a whole. Now the point is, all these things you will find within the law. For interpreting these words, for interpreting the statute, we will take assistance of these things. So that's why internalites. Sometimes we will take assistance from external sources also. For understanding the provisions, we will take assistance from external sources. They become externalites, and they are historical setting, consolidating statutes, previous law, usage, earlier or later acts, analogous acts, dictionary definitions, use of foreign decisions. So historical setting, before drafting Companies Act, Company Bill 2012, what discussions were held regarding one-person company, regarding small company? Those matters we consider for understanding small company in detail, one-person company in detail, historical setting. Consolidating statutes, previous laws, 1956 Companies Act, 1913 Companies Act, we also consider them for better understanding present Companies Act. If present Companies Act, if all the words had only one meaning, clear meaning, no ambiguity, then we apply Companies Act 2013. If our Companies Act 2013 is not providing solution with respect to any matter, then we go with previous laws. Next one, uses, simply practices. Earlier acts, later acts, Companies Act, earlier acts, old acts. Analogous acts. Suppose, listed company issue of securities, this matter is dealt by SEBI. Now with respect to listed companies and issue of securities, we follow SEBI. Unlisted company issue of securities, we follow Companies Act. That means we read both these statutes and we apply the meaning accordingly. Dictionary definitions, if section 2 is not containing any definition. So if section 2 is not defining the word, if section 2 is not defining the word which was used in the statute, go with General Clauses Act. General Clauses Act is also not defining the word, then go with the dictionary definitions, external source. Use of foreign decisions like, Turken rules in indoor management, Royal British Bank versus Turken. Next one, Ashbury Railway Carriage Company versus Ritchie. So all these are foreign decisions. For better understanding of the words used in the statute, you can also take reference of foreign decisions. And last one is interpretation, construction of deeds, documents. So here, you should read document as a whole. This point is important. To resolve conflict between clauses, yes, we need to harmonize the conflicting clauses, and we should read document as a whole for ensuring harmony among them. Suppose, clause 1, it is telling, if you take articles of association, in one clause it is telling that managing director can sign a check up to 5 lakhs. Second clause, it is telling that board approval is required. Board of directors approval is required for signing a check exceeding 5 lakhs. Now, two clauses, two interpretations, but you need to provide harmony to these two clauses and you need to take a interpretation like this. So checks with an amount up to 5 lakhs, MD is sufficient. Checks with an amount exceeding 5 lakhs, MD alone is not sufficient. Board resolution is required. Getting my point, students? So with this, interpretation of statutes revision is over. So now let's revise Foreign Exchange Management Act 1999. So Foreign Exchange Management Act 1999, tell me what is the commencement date of FEMA? 1st June 2000. And what is the preamble of FEMA? Preamble objective, preamble of the FEMA. It is an act to consolidate and amend laws related to foreign exchange, aims to facilitate external trade payments and orderly development of foreign exchange market in India. So this point you have to remember. What is the objective of FEMA? How many objectives are there? Two objectives. One is facilitating external trade payments. Second one is development of foreign exchange market in India. Next one, coming to the extent and applicability. FEMA 1999 is applicable to whole of India, including Jammu and Kashmir. And it is also applicable to the transactions carried by a person resident in India outside India. It is also applicable to the transactions carried by branches
offices, agencies which are established outside India but owned or controlled by person resident in India. And this act is also applicable to all contraventions outside India committed by person resident in India. Getting my point? So total 3 points you have to remember. It is applicable to whole of India. In whole of India, if a foreign exchange transaction is carried by resident or non-resident, FEMA is applicable. But talking about outside India, if a transaction is carried by person resident in India, FEMA is applicable. Suppose foreign currency transaction carried out by non-resident outside India, then FEMA is not applicable. Now, branches, offices, agencies established in India. Now tell me, FEMA applicable or not applicable? Established in India, FEMA is applicable. Established outside India but owned and controlled by outside Indian persons only, then FEMA is not applicable. Branches, any confusion? Branches, offices. Let me tell branch only. So branches established outside India but controlled by person resident in India, then FEMA is applicable to that branch. So not only for transactions but also for contraventions also FEMA is applicable. What type of contraventions? Who is committing these contraventions? Non-resident or resident? Resident to non-resident in India, resident outside India. If any non-resident is contravening FEMA outside India, our FEMA is not applicable. So whether he is resident or non-resident, how can we decide? It depends on his period of stay. In the preceding financial year, which year? Preceding financial year, if his period of stay is more than 182 days, greater than or equal to 182 days, more than 182 days. If he is a resident in India, if he reside more than 182 days in India in the preceding financial year, then he becomes resident. For individual, this condition will apply. Whereas for other than individuals, any person, body, corporate, registered, incorporated in India, it becomes resident. Office, branch, agency in India also becomes resident. It is immaterial whether it is owned or controlled by Indian resident or owned or controlled by non-resident. If branch, agency established in India, it becomes resident. Next one, office, branch, agency outside India, either owned or controlled by person resident in India, then also it becomes a resident. So here residential status period of stay is applicable only to individuals. For other than individuals, incorporation matters, establishment matters. Incorporation in India, resident. Establishment in India, resident. Now coming to individual, yes, of course, even though his period of stay more than 182 days in preceding financial year, he is still treated as non-resident. What are those cases? If he is leaving India because of 3 reasons, any of the 3 reasons. One is he got employment, he got job outside India, or he started business, he is going to start business outside India, or he is leaving India with an intention not to come to India for uncertain period. So in these 3 cases, from the date he left India, up to that date he is a resident. After that date he is non-resident. That means resident, once he is a resident at the commencement of year, is he a resident throughout the year? No. Here residential status we need to check each and every day. So at one point of time he is a resident, at another point of time he is a non-resident. Again, general rule, period of stay 182 days, more than 182 days will not apply to non-residents who are coming to India for any of one of the 3 purposes. What are those one of the 3 purposes? What are those 3 purposes? Employment in India, business in India, yes, intention to stay in India for uncertain time period. Now these are the 3 reasons. These are the reasons why a non-resident is coming to India. From the date he enter into India, he becomes a resident. It is immaterial whether his period of stay in preceding financial year is 182 days, more than 182 days. It is immaterial. Everyone. Next one. Commencement, as I told you, 1st June 2000. Definitions. Authorized person, remember 4 names ma. Authorized dealer is authorized person. Money changer is authorized person. Offshore banking unit authorized person. Any person authorized under section 10 subsection 1 to deal in foreign exchange, foreign securities. He is also authorized person. Next one, transactions. How many transactions we are having? 2 types. Capital and current. A transaction can be either capital or a transaction can be current. But it cannot be both capital and current. Once it is a capital, it will not be current. Once it is a current, it will not become a capital. That means both are mutually exclusive or inclusive? Exclusive. Now what is a capital account transaction? Any transaction altering assets, liabilities including contingent liabilities, outside India of Indian residents. Next one, assets liabilities in India of non-residents. Small correction is there, small correction is there. So what is a capital account transaction? Any transaction alters assets, liabilities, contingent liabilities. Whose assets, whose liabilities, whose contingent liabilities? Residents. Where are these assets liabilities located? Outside India. Resident outside India. Next one, coming to non-resident in India. With respect to non-resident, only assets, liabilities we consider. Transaction affecting asset liability of a non-resident in India, then also it is a capital account transaction. Next one, current account transaction. Any transaction other than capital account transaction, it becomes current account transaction. But 4 transactions are prescribed as current account transactions. What are those transactions? Payment for foreign trade, payment for foreign services and business. Next one, interest on loans, net income from investments. These are also current account transactions. Living expenses, expenses for foreign travel, education, medical care is also a current account transaction. Next one, foreign currency. It is a currency other than Indian currency. Next one, foreign exchange. So foreign exchange means foreign currency. First thing you need to remember, foreign exchange means foreign currency. Includes 3 items. First one, deposits, credits, balance payable in foreign currency. Next one, instruments means DD, LC, bill of exchange, traveler check. Instruments payable in foreign currency but drawn in Indian currency. Instruments payable in Indian currency but drawn outside India. So these 3 things will become a foreign exchange. These 3 things comes under foreign exchange. What are those 3 things? Deposits, credits, balance payable. Expressed, payable in foreign currency. If they are payable in Indian currency, then it is not foreign exchange. Payable in foreign currency. Next one, instruments drawn in Indian currency, drawn outside India. Payable in Indian currency, drawn outside India. Payable in foreign currency but drawn in Indian currency. Then also it becomes a foreign exchange. Next one, foreign security. Foreign security means any security denominated or expressed in foreign currency, but also includes any security which is expressed in dollars but repayment is in rupees. Shares, stock, bonds, debentures denominated in foreign currency, including those redeemable in Indian currency. So for us, face value important or redemption value important? If face value is foreign currency, automatically it becomes a foreign security. Even if redemption value may be foreign currency, redemption may be Indian currency, but still this becomes a foreign security. Suppose reverse security face value is in Indian currency, whereas redemption value is in dollars. Indian security or foreign security? Indian security. Face value denominated in Indian currency, it becomes Indian security. It is immaterial whether redemption is in dollars or rupees. Next one, person, 7 persons, individual, HUF, company, firm, association, whether incorporated or not, and every artificial juridical person not covered above. Last point is important, branches, offices, agencies owned or controlled by such persons. Is it okay? And person resident outside India, who does not qualify as a resident in India. That means any person other than resident, we call him as person resident outside India. So this is a residential status. Check it once. What is the general rule, Period of stay more than 182 days. In which year? Current year or preceding financial year? If yes, he is a resident. And is he leaving our country in the current year? If yes, check for 3 purposes. Yes, satisfied, sir. Then he is a non-resident. No, sir. Just visiting purpose only, sir. Tourism purpose. 2 months. After 2 months, he will come back, sir. Then he is a resident. First of all, he is not at all leaving our country. Then means he is a resident. Next one, non-resident coming to our country. What is the purpose of coming to our country? 3 purposes, sir. Then he is a resident. No, sir. Just visiting, sir. Just tourism purpose, sir. Then non-resident. Sir, first of all, he is not at all coming to our country, sir. Then also non-resident. Okay. Next one. Current account transactions. Tell me, import of machinery where you are making payment at the time of purchase only. Import of machinery from foreign countries and you are making payment Now is this transaction current account transaction or capital account transaction? Current account transaction. Why? To call capital account transaction, foreign asset, foreign liability for non-resident, for resident, or Indian asset, Indian liability for non-resident should be created. But in this case, no foreign asset, no foreign liability is getting created, or no Indian asset, no Indian liability is getting created for non-resident. Therefore, this is a current account transaction. Next one, import of machinery on credit basis, where that credit period is just 3 months only. Short-term banking facilities or short-term overdraft facilities, it comes under current account transaction. Suppose, for this you took term loan of 10 years, then it becomes capital account transaction, because for Indian resident, a foreign liability was created, and for foreign banks, Indian asset was created, so definitely it becomes a capital account transaction. Next, gift to NRI. Gift to NRI, is it a capital account transaction or current account transaction? It depends on movement of money. Suppose I am giving gift in India, I am giving rupees, in rupees gift to a person who is a non-resident, then it becomes capital account transaction. Why? Asset was created for non-resident in India. Asset was created for non-resident in India, then it becomes capital account transaction. Suppose I am having balance, suppose he is giving me gift in dollars. Of course, I cannot hold dollars as per section 4. I need to convert them into rupees. Now foreign asset is not created, foreign liability is not created, Indian asset is not created, Indian liability is not created. Then also it becomes a current account transaction only. See, just look at the distinction, ma. Can be tested for 2 marks. Gift from resident to non-resident. Resident to non-resident means outgoing or incoming? Ma, resident to non-resident means incoming or outgoing? Outgoing. Creates an asset in India for non-resident becomes capital account transaction. I am owner of this building. Suppose our Sanjeev, non-resident, I gave this property as a gift to Sanjeev. Now for Sanjeev, a non-resident, Indian asset was created. Yes or no? Yes or no? Capital account transaction. Ma, any confusion? Next one, gift from non-resident to resident. Incoming or outgoing? Non-resident to resident. Incoming or outgoing? Incoming. If funds are remitted to India, no restrictions. I cannot hold dollars. Definitely I should convert dollars into rupees. If I'm converting it into rupees, for me no foreign asset, no foreign liability. For my friend or for my brother, no Indian asset, no Indian liability. That means this gift becomes current account transaction. Next one, gift from non-resident to resident outside India. Same logic will apply. PRI cannot keep the funds abroad, must bring them back to India as per FEMA rules. Here also it becomes current account. That means gift when it becomes capital account, gift when it becomes capital, I am creating an asset in India for non-resident, and if it is gifted, then it becomes capital account transaction. Next one, schedule 1, prohibited transactions under FEMA. Current account, prohibited transactions. What are those transactions, ma? Lottery winnings, racing, riding, etc. Next one, purchase of lottery tickets, payment of commission. All commissions prohibited, only commissions with respect to investments in JVs, wholly owned subsidiaries abroad of Indian companies prohibited. Investments, I'm making this export sale. Why? I get dollars in order to finance my fully wholly owned subsidiary or joint ventures which are located outside India. Then commission on those exports is prohibited. Next one, dividend balancing is applicable, then remittances of dividend by Indian companies is also prohibited. Dividend balancing, I told you, foreign company came to India, set up one plant in India, and that plant produced some 50,000 goods. Out of 50,000 goods, 20,000 were sold in India, they got Indian rupees. 30,000 units were sold outside India, they got a foreign currency. Now with respect to 30,000 units, whatever profit is there, that profit is available in foreign currency, that can be withdrawn in the form of dividends. But the profits which they got from India, from sales, from domestic sales in India, that profit they can withdraw, but they cannot withdraw in dollars. In rupees they can withdraw, that rupees they can purchase any property in India. That's not a problem at all. But they cannot convert dollars, they cannot withdraw dollars. Next one, payment of commission on exports under rupee state credit route. Rupee state credit route. Any export is happening under this route, India will get rupees only in return. India will not get a foreign currency. So exports, in case of exports connected to this route, On this, commissions allowed or prohibited? Prohibited. But with respect to tea and tobacco, permitted. That permission is also up to 10% of invoice value. 10% of invoice value can be paid as can be paid as commission on exports. And for the 10% of commission, foreign exchange withdrawings allowed. Next one, payment related to callback services strictly prohibited. Remittance of interest income on funds held in non-resident special purpose scheme accounts. Non-resident special purpose scheme account, here balance you can withdraw, but any interest is there in this balance, that interest amount you can't withdraw in foreign currency. Are you getting my point? So when I visited India, I deposited 8 crores rupees, in terms of dollars, it is maybe some 1 million USD I deposited. So what is the balance? 8 crores. At the end of the year, they added 80,000 interest. Now when I am leaving India, I can take 8 crore rupees, I can convert it into dollars, but I cannot convert 80,000, which is an interest accumulated on this balance. Interest for withdrawing interest in dollars is prohibited, whereas your principal amount you can withdraw, dollars are permitted. Next one, Schedule 2. Tell me, all these are illegal transactions or legal transactions? Are legal, but for carrying these transactions, withdrawal of dollar is prohibited. Next one, Schedule 2 summary. Schedule 2, what is Schedule 2? Transactions require prior approval of Government of India. So what are those transactions? Cultural tours, permission to be taken from Department of Education and Culture. Advertisement, not all advertisements are restricted, only advertisement in print media outside India by a state government PSU and amount exceeding 10,000 and the purpose of advertisement is other than tourism, foreign investments, international bidding, then only permission to be taken. Suppose if it is not print media, no need of permission. Suppose advertisement in print media by others not SG, not PSU, then also permission not required. Suppose advertisement by SG, PSU, amount is $9,000, then also permission not required. Remittances of freight of vessels chartered by PSUs, yes, for freight remittances also permission to be taken, permission from Ministry of Surface Transport. Next one, payment for import via ocean transport by government departments PSU on CIF basis. So here who is the payer? Government departments or PSUs. So for making these payments against imports, above point is freight amount. Here import invoice amount. This is about invoice amount, this is about freight amount. Generally, why we incur freight? For transportation we incur freight, and for purchase we incur invoice amount. For purchase of the things we need to pay invoice amount. So both the amounts require permissions, and the permission is required from Surface Transport Ministry Chartering Wing. Next one, multimodal transport operators remitting to agents abroad any commission, for them also, yes, you need to obtain registration certificate from the Director General of Shipping. Next one, hiring charges for transponders. You all know broadcasting rights. So by TV channels, payers, who are the payers? TV channels, internet service providers. Example, TV channels means Star Plus, and internet service providers means like Netflix, YouTube. Suppose they also purchased these rights. And imagine if these are residents. I'm talking about, Netflix is a non-resident. Okay, in India, similar to Netflix, we are having something, and that entity is paying money for getting these rights, hiring charges for transponders. Then they can make payment subject to approval of Ministry of Information and Broadcasting. Understood? Next one, container detention charges. You are allowed to use that container for a limited period. Period exceeded, now you have to pay charges. If charges are within the prescribed limits, no need of permission. If charges exceed rates, who will prescribe rates? Central government will prescribe rates. If charges exceed rates, then take permission from Ministry of Surface Transport. Next one, prize money sponsorship fees. Tell me, who are paying these amounts? National body, national sports body, international sports body, state sports body. Other than these three bodies, where they are paying? Outside India. How much they are paying? Up to 1 lakh USD, no permission. Exceeding 1 lakh USD, permission is required. From whom? Ministry of Human Resources Development. Next one, membership fees for protection and indemnity. For protection and indemnity, P&A clubs, here also Ministry of Finance permission is to be taken. Now, Placing these many restrictions, what is our ultimate agenda? Why we place restrictions on these payments? Only to protect foreign reserves from getting misutilized. Next one, schedule 3. These are permitted, freely permitted up to $250,000. Exceeding $250,000, permission is to be taken. RBI permission is to be taken. Private visits abroad, except Nepal and Bhutan. Next one, gifts, donations, employment abroad. For all this, up to 250,000 USD. Immigration also 250,000 USD. But the point is, if the destination country, if it is giving a certificate, sir, for reallocation from India to this country, 5 million USD is required. Like that, if they give immigration certificate, then even without RBI approval, up to 5,000 USD they can withdraw. Getting my point? Next one, maintenance of relatives, yes. Business travel, yes. How much is the limit? LRS limit. What is LRS limit? 250,000. Medical treatment abroad, for this also 250,000. But if medical institute is giving a quotation exceeding 250,000 USD, then also you can withdraw exceeding 250,000 USD. Next one, studies abroad, yes. Here also limit is 250,000. But if that university is giving a quotation exceeding 250,000 USD, then also you can withdraw freely without any RBI permission. Other current account transactions, any other permissible current account transaction which is within LRS limit. Now tell me, for each and every category 250,000 limit there are. For all categories 250,000 limit is there. For all, for individual, for all. Now schedule 3 current account transactions plus schedules, in capital account transaction, all put together $250,000, or for current account 250,000, for capital account 250,000, all put together. That means an individual, per person, the limit per year is 250,000. If year gets completed, next year again new limit is 250,000. Next one, facilities for persons other than individuals. The following persons are required to take prior RBI approval. When there is a conflict point between 1 and 2, in case of 1, what they will tell, up to $250,000 permission is not required, like that he will tell. But here coming to second point, you need to take prior approval of RBI, like that, reverse, he's playing a reverse trick. Here RBI permission is required, like that he is telling. RBI permission when it is required, if donations exceeding, commissions exceeding, consultancy services exceeding, reimbursements exceeding. That means, in first point they are telling up to, second point they are telling greater than. First point up to, no permission. Second point greater than, yes, permission. Getting the difference? So for individuals they are talking about LRS. For other than individuals they are giving transactions, they are specifying the things. For other than individuals don't apply LRS. If you are applying LRS for other than individuals, what happens? I will incorporate 10 dummy companies, 10 shell companies. For each company, if $250,000 limit, if I apply, just imagine, for 10 companies, how much amount I can withdraw? 25 lakh USD. Allowed or not allowed? Apply the sense and tell me, apply common sense and tell me. 10 fake companies are incorporated, and for each company, if you apply LRS scheme, each company can withdraw up to how much amount? $250,000. That means as an individual, I can't withdraw $25 lakh, but I'm incorporating 10 dummy companies, and with these 10 dummy companies, I'm withdrawing 25 lakh USD, which is illogical, which is not correct. That's why LRS limit is applicable only for individuals. Other than individuals, 4 transactions were given: donations, commissions, remittances, reimbursements. Donations up to 1% or up to $5 million, whichever is less, up to, permission not required. Next one, commission up to 25,000 USD or 5% of a sale amount, whichever is more, up to that amount, permission is not required. Consultancy service for infra projects up to 10 million USD, permission not required. Other projects up to 1 million USD, permission not required. Next one, pre-incorporation expenses reimbursements, 5% of the investment or 1 lakh USD, whichever is higher. In all these cases, whichever is higher, but donations only, whichever is less, you need to remember. And up to the limits, permissions not required. Exceeding the limits, permissions are required. Okay, na? Next one, exemptions. RFC accounts, EEFC accounts, these restrictions will not apply, but schedule 1 will apply. Schedule 1 will apply. Now coming to EEFC accounts, two things in schedule 2, two things. For these two things you have to take permissions. What are those two things? One is membership P&A club, which is covered in schedule 2. Next one, commission to agents abroad for selling properties, this is schedule 3. And reimbursement of pre-incorporation expenses, this is schedule 3. Total how many activities are there? 3 activities. One is falling in schedule 2, 2 is falling in schedule 3. So schedule 3 activities require RBI approval, schedule 2 activities require CG approval when limits have been exceeded. For P&A club there is no limit. Even $1 you are making payment, even $1 you are making payment, you need to take permission. Next one, international credit card usage, no approvals required. LRS, what is the limit, ma? $250,000. And this LRS is not available to corporates, partnerships, HUFs, trust. LRS is applicable only to individuals. Special notes, consolidation, clubbing allowed for family members. But for capital account transactions, clubbing is allowed only if they become co-owners or co-partners. Next one, any resident acquired property outside India when he was a non-resident, yes, he can continue to hold such properties. Any non-resident acquired properties in India when he was a resident, acquired properties in India when he was a resident, he can continue to hold such properties. There is no restriction, there is no prohibition. And last category, capital account transactions, schedule 1, schedule 2. Schedule 1 is for residents, schedule 2 is for non-residents. Yes, a list is given, just remember that list. Next one, transactions with no restriction, freely permissible. What are those freely permissible, ma? Amortization of loans, that means making loan balance 0. That means pre-closure of loans. You are paying complete balance amount today itself. Repayment of loan installments, depreciation of direct investments in ordinary course of business. In these cases, yes, permissions are not at all required. Next one, prohibited capital account transactions. General prohibition exceeding $250,000. If you want, you can take RBI permission and you can do it. See, no person can sell or draw foreign exchange for capital account transactions unless permitted by regulations. And what is the permissible limit? $250,000 under LRS. Next one, persons resident outside India are prohibited from carrying how many activities? 5 activities. One is chit fund, Nidhi company, agriculture plantation activities, real estate business. Last one, transferable development rights. Coming to chit funds, if state government authorizes, it can, but subscriber can deposit dollars, but subscriber is not allowed to withdraw chit amount in dollars, non-repatriation basis. Nidhi companies, absolute prohibition, agriculture, absolute prohibition, real estate, development activities permitted, other than development activities prohibited. TDRs prohibited. Next one, restrictions on transactions with North Korea. So no capital account transaction is permitted with any person, citizen who is a citizen or resident of North Korea without approval of CG. All existing investments should be closed within 180 days of commencement of these rules. Everyone? So we'll have a break. So let's quickly revise Limited Liability Partnership Act 2008. So 3 dates important. Parliament passed this bill on 12th December. President gave approval on 7th January, 12th December 2008, 7th January 2009. Notification date 9th January 2009. Next one, purpose of this act to regulate limited liability partnerships. Total sections, we are having 8 sections. 81 is omitted. We are having 80 sections, and we are having 4 schedules. Schedule 1 determines duties and rights of partners and LLP in the absence of LLP agreement. Means LLP agreement, do you think in total it is option? No. Any clause in LLP agreement, if it is silent with respect to issue, then we can follow first schedule. Next one, second schedule, conversion of firm into LLP. Third schedule, private company into LLP. Fourth schedule, unlisted public company into LLP. Next one, Indian Partnership Act, applicable or not applicable? Not applicable. Out of definitions, 2 definitions are very important. Financial year, small LLP. Financial year. So generally financial year closure date is 31st March of every year. But if LLP is incorporated after 30th September, that means on or after 1st October, then financial year closure date shall be 31st March of following financial year. Clear? Small LLP limits, what are the limits? Contribution up to 25 lakhs. Turnover up to 40 lakhs. Partners in LLP. Who can be a partner? Individual body corporate. Tell me, can HUF become partner of LLP? Can a foreign LLP become partner of LLP? Foreign LLP. Indian LLP. Indian company. Foreign company. Company incorporated outside India. Corporate sole. Cooperative society. So corporate sole, cooperative society, HUF not qualified. Individuals also, minors not admitted. Unsound mind not admitted. Adjudicated insolvent not admitted. Undischarged insolvent not admitted. Okay. Next, minimum number of partners. Tell me, at any point of time, how many partners LLP should have? Minimum 2 partners. Minimum 2 partners. In case number of partners fall below 2, how many months time period is there to increase the number? 6 months. If business operations, if LLP continue business operations for more than 6 months with a reduced number of partners, then sole partner is liable for all the debts contracts entered into by LLP after expiry of 6 months. Any limit on liability? Unlimited liability. One association planning to start charitable institution. They want to incorporate charitable institution as LLP. LLP allowed or not allowed? LLP is allowed only for business operations. Business. Next one. Designated partner. Who can be designated partner? Individual, body corporate. Individual. How many designated partners LLP should have? 2 designated partners. Out of 2 designated partners, one shall be resident in India. Resident in India means his period of stay is 120 days. Okay. So minimum number 2 designated partners. Residential requirement only 1 designated partner. Corporate partners. In case of LLP with 100% body corporates, then 2 body corporates shall nominate their nominees. And nominees can take the position of designated partner. Correct. Next one, designation at incorporation. Yes. So how designated partners are appointed, ma? Through LLP agreement. Next, at the time of incorporation, in incorporation document, if we are having details of designated partner, then those partners will become designated partners. So to name designated partners, we are having 2 ways. One is naming them in a incorporation document. Other one is naming as per LLP agreement. Next one, before naming any partner as designated partner, it is important to get written consent requirement. Next, communicate matter with ROC within 30 days of appointment. Communicate matter with ROC. And what is the eligibility criteria? First of all, he should become partner of LLP. Next, if he is a resident in India, or even if he is not a resident, he can become designated partner. But the only condition is, one designated partner should be resident in India. Next one, he should have a DPIN. So tell me, without DPIN, can we appoint a designated partner? If we appoint, it's a violation of LLP Act 2008. Okay. Next one, liabilities of designated partner. In case of defaults by LLP, who gets punishment? LLP and a designated partner. So responsibilities, they are responsible for ensuring compliance with all provisions of LLP Act, including filing documents, returns, reports as specified by the Act or LLP agreement, and they are liable for penalties imposed on LLP for contraventions. Next one, changes in designated partner. So any vacancy in case of designated partner, that vacancy shall be filled within 30 days, and communicate the same with ROC within 30 days of appointment of designated partner. Punishment for contravention, yes, violation of section 7 subsection 1, section 7 subsection 4, section 7 subsection 5, or section 9. Already told you the summary of these sections, right? So one is no designated partner, one is a vacancy in designated partner, other one is changes of designated partner. Next one, incorporation of LLP. For incorporation of LLP, we use document called Philip. Incorporation document, section 11. Along with incorporation document, attachments. One is statement of compliance. Declaration of compliance. Who signed declaration of compliance? Practicing professional as well as partners involved in the formation of LLP. Any false declaration, punishment. Imprisonment up to 2 years, fine 10,000 to 5 lakhs. Imprisonment and fine or fine and fine. Incorporation by registration. Once ROC feels documents are adequate. Within 14 days, he registers incorporation document and he issue certificate of incorporation, which contain name of LLP, identification number of LLP. Next one, registered office. Yes, LLP should have registered office for communication, jurisdiction, investigation. Next one, effect of registration, similar to effect of incorporation of company. It will get all the characteristics of body corporate. Next, name of LLP shall always ends with a limited liability partnership or LLP acronym. Next one, name must not be undesirable or identical to existing LLPs, existing companies, existing trademarks. That means even if your LLP name is similar to name of existing registered partnership, no violation. Everyone? Then in that case you may get a doubt, sir, that registered partnership firm is at risk. No, sir. Advise them to get a registered trademark. Advise them to get a registered trademark, because trademark can be owned by company, trademark can be owned by proprietor. Yes or no? So in that case, it definitely it becomes undesirable. But name similar to name of existing registered partnership, it is not undesirable. When it becomes undesirable, if it is identical to or resembles with name of existing trademark, LLP company, and undesirable in the opinion of CZ. Next one, reservation of name. Tell me, how long name shall be reserved? 3 months from the intimation by registrar. Today if ROC is giving intimation to you, yes, your name is reserved, 3 months it will be reserved. Within 3 months you need to file incorporation document, you need to execute a LLP agreement also. Next one, rectification of name. Tell me, rectification of name comes in because of 3 situations. One is application by company, application by existing trademark, registered holder. Yes or no? Application by existing company, LLP, registered trademark, proprietor. If these people file an application with CG, if it is satisfied, CG will give order to rectify the name. Tell me, what is the time limit we are having to rectify the name? 3 months. Yes or no? Within 15 days. Within 15 days of change of name, intimate the same with the registrar. Registrar issues certificate of incorporation. Now make an amendment to LLP agreement, because LLP deed, the first clause is name clause only. Next one. Eligibility to be partners. See, how can we become partners of LLP? In how many ways? 2 ways. One is if you are a partner at the time of incorporation. Second one, that means subscriber to incorporation document. Second one, new partner subject to LLP agreement. I told these points, anyone can become a partner subject to LLP agreement. And a person who subscribed the incorporation document, he is also a partner. Relationship of partners. So tell me, guidelines, who will give, which document will give guidelines for relationship of partners? LLP agreement. If LLP agreement is silent with respect to any aspect, first schedule. Next one, cessation of partnership interest. How many ways partnership interest can be terminated? 3 ways. Resignation by express notice, death or dissolution, disqualification, attracting disqualifications. Now in these 3 cases, first case, it is compulsory to give notice. How many days notice shall be given? In advance, how many days? 30 days. 30 days. Why this 30 days? For making settlements. Okay. Once LLP receive letter from former partner, it is the duty of LLP to communicate same with ROC. Until and unless intimation given to the outsiders, intimation given to the ROC, this former partner is treated as normal partner. Understood? Accordingly, he is liable for the acts subsequent to resignation. Next one, registration of changes in partners. Yes, within 30 days of change of name. No. Within 15 days. Within 15 days of change of name, change of address particulars, it is the duty of partner to communicate with LLP. LLP has to communicate with registrar within 30 days of receipt of information from partner. And same 30 days concept is for filing a resignation by partner also. If any partner is getting resigned, if any partner is getting retired, that information, upon receipt of that information by LLP has to communicate with ROC within same time limit, 30 days. Next one, partners are as agents. That means act of partner, tell me, all other partners liable, LLP liable. Come on, tell me, act of partner in LLP, All other partners liable, LLP liable. And LLP is not liable for the act of partner if two conditions are satisfied. What are those two conditions? Not within the authority, and third party is having knowledge of partner's authority. That means partner is without authority, he is entering into the contract. If two conditions are satisfied, now act of partner, LLP is not liable, partner is personally liable. Even in case of frauds, even in case of negligent cases, LLP is responsible to outsiders, but internally LLP will get reimbursement from partner. Understood? That means in these two cases, in the first case, in the second case, partner will have limited liability, unlimited liability. Unlimited liability. All partners are only partner responsible for fraud. Only partner responsible for fraud, only partner responsible for negligence. Next one, holding out. In case of holding out also, anyone falsely representing themselves as a partner is liable for obligations incurred due to such representation. However, LLP is liable to the extent of benefit derived from such representation. I told you that representation can be expressive, implied. Express means you are telling that you are partner to the firm. Implied means we are telling that you are partners and you kept silent. That means your conduct itself is sufficient that you are making a representation. Getting my point? Because of this representation, if LLP is getting any loan, you are liable to third party. First of all, LLP is liable to refund that financial benefit, refund that credit. If LLP is not doing, they will ask you only. Next one, unlimited liability in case of fraud. As you all know, partners liability, partners committing fraud are personally liable for all LLP debts. Also, imprisonment up to 5 years and fine 50,000 to 5 lakhs. Okay, LLP can avoid liability if fraud occurred without its knowledge. Next one, whistleblowing. My question is, whistleblowing applicable to all LLPs or all LLPs except small LLPs? All LLPs, whistleblowing concept is applicable. So under whistleblowing, we are giving a protection to whom? Whistleblower. Understood? And we are also giving privileges to whistleblower. What privileges? Reduction in punishment or waiver of punishment. Next one, contribution. Come on, tell me. Form of contribution. It should be only in money. No, it can be in money or money's worth. Tangible property, intangible services. Suppose I can tell like this. I will use my professional expertise for the promotion of a firm. Annually, my professional expertise, I use it to charge 20 lakhs for rendering these services. So this 20 lakhs I will not charge. That means here contribution is in not in money mode. Contribution is in intangible mode. And monetary value of such contribution shall be accounted in books of accounts maintained by LLP. Okay, everyone. Obligation to contribute. Partners' obligation to contribute money, property or services are governed by LLP agreement. Creditors relying, that second point, I don't know how many of you remembered. Creditors relying on those obligations can enforce them unless notified by any compromise among partners. That means, in LLP agreement, there is a clause that partner will contribute 10 lakhs. Based on that statement, we gave a credit of 6 lakhs. Later, they entered into compromise, they made it 0. Now tell me, the debt given by me, affected or not affected? Not affected. That means those partners are liable to me for 6 lakhs, as if there is no compromise. Suppose with my consent they entered into compromise. With my consent, if they enter into compromise, then I can't do nothing. Compromise arrangements there, right? So I gave permission to them. Okay, you make it 0 and I'm also reducing the debt from 6 lakhs to 4 lakhs. I'm telling now, I won't recover complete 6 lakhs. I can recover only 4 lakhs. But normally creditor will not give consent to the compromise. Next one, maintenance of books of accounts. Books of accounts, here you will find 3 things: assets, liabilities, sales, purchase, receipts, payments. Tell me, double entry or single entry? Double entry system. Cash mode or accrual mode? Both allowed. So books of accounts can be maintained in cash or accrual basis. Next one, where to maintain books of accounts, ma? Where to maintain books of accounts? Only at registered office. How many years? 8 preceding financial years. Next one, every LLP has to prepare statement of account and solvency, and it should be prepared within how many months? 6 months from closure of financial year. Same shall be filed with registrar within 30 days after expiry of 6 months. Okay. Signed by designated partner. In case of non-compliance, 100 per day, maximum 1 lakh for LLP, 100 per day, maximum 50,000 for designated partner. Everyone. Penalties for other non-compliance: failure to maintain books of accounts, failure to prepare solvency statements, failure to comply with audit requirements. I told you in yesterday class, I told you same point. Failure to comply with these three aspects. LLP 25,000 to 5 lakhs, designated partner 10,000 to 1 lakh. Now tell me, when authority comes to know that LLP is not maintaining books of accounts, when they ask for information, they will come to know, authority will come to know that LLP is not maintaining proper books of accounts. In that situation only LLP will get punishment. Yes or no? That means fees, punishment, both are not same. At the time of filing returns, we pay fees. For delay period, we pay additional fees. But coming to these penalties files, penalties and fines, who will levy penalties and fines? Only authority. Authority will levy penalties and fines only after inspection, investigation. That means simply non-compliance will not attract punishment. Non-compliance attracts punishment. It is subject to whose discretion? Authority's discretion. Understood? Hello? Next, annual return. What is the time limit for filing annual return with registrar? 60 days from closure of financial year. In case of delay, same punishment. You know, for statement of solvency, what is the punishment? Same punishment. 100 per day up to 1 lakh for LLP, 100 per day up to 50,000 for designated partner. Next one, inspection of documents. So who is having power to inspect documents? Authority. Registrar is having a power to inspect documents. With respect to public documents, any person can inspect. By paying 100 rupees fees, you can download any information you want. Okay. In case of false statements, you know, annual returns contain false statements. Statement of solvency and accounts contain false statements. Then what is the consequence? Imprisonment up to 2 years. Person making such false statements, you know, imprisonment up to 2 years and fine 1 lakh to 5 lakhs. Everyone. ROC can request information from present partners, former partners, designated partners, employees. If you are not complying with ROC order, punishment. What is the punishment? Fine 2,000 to 25,000. Of course, these offenses can be compounded. But what are the conditions for making for making offenses compounded? You know, first you need to check authority. Who is having a power to grant compounding of offense? Regional director. Just remember regional director. In brackets, you write in the examination, officer not below rank of regional director authorized by central government. You write it in exam. For the time being, who is having authority? Regional director. Amount how much? Penalty how much? You know, minimum fine prescribed in the section. Maximum fine prescribed in the section. Suppose in the previous topic, if you observe, in the previous concept, what is the minimum fine? 2,000. Maximum 25,000. So regional director will also impose same fine, but practically how much fine he will impose? 50%. Getting my point? And because of compounding of offenses, what advantage we are having? You know, prosecutions can be cancelled, prosecutions can be dissolved, so time can be saved, that's it. Next one, for repeat offenses, benefit of compounding available or not available? Up to 3 years of compounding of earlier offense, benefit of subsequent compounding not available. Once 3 years completed, offenses, you know, offenses, one offense and second offense which are similar in nature, the time gap between these two offenses, if it is 3 years, you can claim compounding benefit for 2 offenses. Understood? Next one, process. So do you think regional director will knock your door and regional director will ask you, do you want compounding benefit? Is it a close-up advertise? You know, is it a Colgate advertisement? In your paste, salt available or not? Yes, salt is available in kitchen. Now tell me, do you think regional director voluntarily he comes to you and he will ask you, do you want benefit of compounding of offenses? No. First you need to file application, ra. You need to file ROC. With whom, ra? With whom, ra, you file ROC? File application with ROC will forward application to regional director. Failure to comply regional director orders leads to double punishment. double punishment. One question, offenses where imprisonment is required, offenses where imprisonment is there, can be compounded or non-compounded? I told you clearly, offenses how many types? Two types, less severe, more severe. More severe means there who is getting affected, public is getting affected. If you are furnishing false statements, based on the faith of false statements, they thought these statements are true, bank gave loan to you. Now whose interest is there? Public interest. Bank is nothing but part of public only, right? Now these type of offenses can be compounded or can't be compounded? Can't be compounded. Remaining offenses where only fine is there, those offenses can be compounded. Okay, everyone, partner's interest transferable or not transferable? Transferable. But transferee, will he get any rights? Will he get any management rights in LLP? No. Only admitted partner will get rights in the management. Admitted partner. So transferee is not entitled to participate in day-to-day affairs of the LLP. Everyone. Next, conversion provisions. Firm can be converted into LLP as per second schedule. Private company can be converted into LLP as per third schedule. Unlisted public company can be converted into LLP as per fourth schedule. Only point you need to remember is effect of conversion. One practical question they will ask. One practical question they can ask. So yes, a private limited company with so and so obligations, like with 10 creditors, it was converted into LLP. Now that new LLP is rejecting the claims of creditors. Do you agree with the contention of LLP? Like that they will ask you a question. In that case you need to write that box, that matter in the box. Understood? Upon conversion, assets, rights of firm becomes assets, rights of LLP. Obligations, liabilities of firm becomes obligations, liabilities of LLP. Okay. Even obligations, I told you examples like ESOP, one thing, gratuity, another thing. Old firm gave a promise, yes we will give you, gratuity is applicable to them, for example. Now the tenure is also counted with respect to tenure you worked in LLP. Okay. Next one, compromise arrangements. So tell me, who is having power to sanction compromise arrangements? Tribunal. But tribunal will give approval based on application filed by whom? Partners, creditors, LLP, liquidator. 4 persons can file application with NCLT for compromise or arrangement. Compromise or arrangement order will be passed by tribunal subject to majority of the person's consent and holding not less than 3/4 of the value. Everyone, if these two conditions are satisfied, then tribunal will pass an order. Once LLP is receiving order, it is the duty of LLP to file that order with ROC within how many days? 30 days. Okay, non-compliance leads to penalties. Next one, power of tribunal. Tribunal, in addition to passing an order, it can also supervise, it can also modify compromises, arrangements depending on the situations. Next one, if unworkable, tribunal can order for winding up of the LLP. Okay. Reconstruction or amalgamation. So here you will find two LLPs, transferor LLP, transferee LLP. Upon amalgamation, what happens? Upon reconstruction, what happens? Assets, liabilities of transferor LLP becomes assets, liabilities of transferee LLP. Okay. In case of dissenting partners, exit offer will be given according to the terms and conditions of tribunal. Next one, effect of transfer over. Next one, restrictions. Tell me, LLP, can LLP be amalgamated with a company? No. Winding up and dissolution of LLP. Modes of winding up: voluntary, compulsory. Voluntary means decided by partners, compulsory means decided by tribunal. Okay. Circumstances for tribunal winding up: 5 circumstances. One is LLP decided to wound up, then tribunal will pass an order. Above situation also there, right? Compromise arrangement not possible. Now what tribunal can do? Tribunal pass an order for winding up of the LLP. Next one, number of partners fall below 2 and business carried out for a period more than 6 months. Next one, LLP is acting against sovereignty, integrity of India. Then also tribunal can pass an order for liquidation, winding up of LLP. Next one, failure to file statement of account solvency or annual return for how many years? How many years? 5 consecutive years. Next one, just and equitable grounds. Yes, tribunal can pass an order for winding up of LLP. Next one, business transactions. Tell me, can a partner do business with LLP? Yes. Yes. That means can he maintain, can he earn profits with the transactions made with LLP? Yes. In partnership, not allowed. Company allowed. LLP allowed. Next one, application of Companies Act provisions. See, before applying Companies Act provisions to LLP, what procedure we need to follow? First, central government will introduce draft bill in both the houses of parliament for 30 days. Maybe one session or 2 sessions covering the 30 days. By the end of the time, central government should get approval from both the houses of parliament. Suppose if both the houses of parliament rejected the bill, notification, can CG issue notification? No. Both the houses of parliament gave approval subject to modifications. Now central government can issue notification subject to those modifications. Understood, everyone? Next one, additional fees. Additional fees. Delay in filings of forms with ROC attracts additional fees. That's what documents. Listen, documents are returns filed after due date. After due date means what? Delay filings only. Yes or no? For delay filings, additional fees concept is there. Last one, enhanced punishment. Tell me when enhanced punishment gets attracted? In case of repetitive offenses. In case of repetitive, that means first offense you will get normal punishment. For subsequent offenses you will get enhanced punishment. What is the enhanced punishment? What is twice of the normal punishment? Okay, that's it. So in this lecture, let's quickly revise General Clauses Act 1897. See, General Clauses Act 1897 came into force with effect from 11th March 1897, and this is an act to consolidate and amend previous General Clauses Act. So tell me, what is the objective of General Clauses Act? To shorten the length of all central acts, to provide uniformity of expressions in all central acts. General Clauses Act. Act is nothing but statute. Statute all about general words which were not defined in all central acts. And this General Clauses Act 1897 is not having its own territorial extent. The territorial extent of General Clauses Act depends on territorial extent of central acts. If central acts are applicable to whole of India, then General Clauses Act with respect to central acts, General Clauses Act with respect to that central act is applicable to whole of India. If central act is having a limited scope, then General Clauses Act with respect to that central act will have limited scope. Clear? Next, in General Clauses Act we are having two parts. Part 1 definitions, part 2 general principles of interpretation. So from definitions we can expect one question, and from general principles of interpretation we can expect one question. So coming to the definition, act includes series of acts, illegal omissions related to offenses, civil wrongs. Now tell me, non-supply of necessaries to a needy person. Non-supply. Listen. A son is having a old grandfather. He failed to supply food items to old grandfather. Will it come under act? Will it come under act? Yes, because act includes illegal omissions, but act will not include an omission which is not illegal. Remember, act includes series of acts, illegal omissions, but an omission which is not illegal, we call it as an act or not an act? Not an act. Clear? Next, affidavit. It's a written statement. It includes affirmation, declaration instead of swearing. And who can give affidavit? Person authorized by law can give affidavit. Central act. Central act. Right now central act means act of the parliament. But pre-constitution laws, if you take pre-constitution laws, central act means act by Governor General. Governor General. That means act of Dominion Legislature, act by Governor General. Next one, central government. Right now central government means president. Right now central government means president. And with respect to functions, with respect to delegation of functions to state government will also comes under the definition of central government. And also lieutenant governor administrators with respect to functions delegated to them. This is present central government definition. Then what about central government definition? Pre-constitution laws. Governor General plus government of province plus chief commissioners. But coming to Governor General, government of provinces, chief commissioners, the functions which are delegated to them with respect to central powers, only these people will form central government. Everyone, I'm not telling that state government is central government. Few functions were delegated to state government by central government. Now, with respect to those functions, state government is also called central government. Next one, commencement. Commencement means coming into force. Commencement means coming into operation. Document. 4 conditions to be satisfied. Document means. What are those 4 conditions? Writing on any substance, expressed in letters, words, numbers, or any one of those means. Next one, intended to be used, which we use at present or which may we use at future, and recording the matter on a substance. Recording the matter. 4 conditions. Recording a matter on any substance. First one is writing or expressed matter on any substance by way of letters, words, figures, or one of any of those means. Next one, purpose is we need to use it or we had an intention to use it in future. And last one, recording the matter. If these 4 conditions are satisfied, then it is a document. Next one, enactment equal to act plus rules plus provisions. Act plus rules plus regulations plus circulars plus notifications. Financial year starts from April 1st, ends with 31st March. Good faith. As per General Clauses Act, good faith means acts done honestly. Whether you are negligent or not, if act is done honestly, it is said to be in good faith. Government includes center, state. Government securities of a center, state, excluding Part B state securities. Part B state securities. Part B states, these are the princely states which are headed by Raj Pramukh. Next one, immovable property. 4 things you have to remember. Land, benefits arising from land, things attached to the land. Next one, permanently fastened to the earth. So right to catch fish. Next one, crops until harvested. All this comes under immovable properties only. But timber, wood will not come under immovable property. Imprisonment, it may be a simple, it may be a rigorous. Indian law excludes an act passed by United Kingdom Parliament. Understood? Indian law excludes act of United Kingdom. Next one, month, British calendar month. Movable property, any property except immovable property. Oath, include affirmations, declarations. Offense, any act or omission punishable under law, we call it as offense. Any act or omission. Simply illegal omissions, negative acts are treated as offense. Suppose non-filing of annual returns. You forgot to file annual returns. Here you are not performing act, but you omitted to perform an act. That is omission. So for omission, punishment, yes, we call it as offense. Next one, official gazette includes Gazette of India, state gazettes. Person includes company, association, body of individuals, whether incorporated or not. Registered refers to documents registered under prevailing laws in India. Ignore registered. Next one, swear includes affirmation, declaration. Year refers to British calendar year. Next, coming to section 5, coming into operation of enactment. General rule. If date is specified in notification, then from that specified date onwards, act comes into force. If nothing is specified in the notification, then the date when it received consent of President of India is the date of commencement. Okay, and it will apply from 12 o'clock. That day, when the day starts, midnight 12 o'clock. So from that point onwards, the provisions will apply. Clear? Everyone. Now tell me, can court command government to implement laws? No. Next one, effect of repeal. Effect of repeal, very important. In general principles of interpretation, first important provision is repeal. So tell me, repeal means permanent deletion, as if it never came into existence, but it will not affect 5 things. What are those 5 things? It will not revive previous laws, it will not affect a previous operation of repealed enactments, it will not affect any rights which you got under previous laws, it will not affect any penalties which were imposed on you under previous laws, it will not affect ongoing potential inquiries proceedings. For example, Companies Act, imagine Companies Act 2013 was repealed. Do you think Companies Act 1956 gets revival? No. No. Next one, Companies Act 2013, if Companies Act 2013 got repealed, then you know the certificate of incorporation issued under Companies Act 2013, will it get invalidity? That means will it become invalid? No, it is still valid. Next one, Companies Act 2013, yes, it gave some rights to you, it gave some rights, you know, compensation, it awarded some compensation to you under for example section 37, class action suit, right? Class action suit, one right is given to you under section 37 of Companies Act. Now repeal of Companies Act 2013, will it affect your rights? No. Suppose under Companies Act 2013, yes, you were identified as a person in default, as a person in default, and it imposed imprisonment on you. That imprisonment period is going on, meanwhile old act got repealed, you know, Companies Act 2013 got repealed. Now will it affect ongoing punishments? No. Next one, ongoing potential inquiries litigation. Suppose under Companies Act 1956 you committed one fraud, inquiry is going on, meanwhile 1956 Companies Act got repealed, 2013 Companies Act got reenacted. As a result, ongoing legal proceedings will come to an end or will continue? Will continue. Understood? Next one, continuation of processes. Inquiries, litigation, remedies may be initiated, continued or enforced even after repeal. Simply it is talking about ongoing legal proceedings. Best example, Sahara group of companies. It was identified as a fraudulent company under old act. When old act got repealed, do you think all the proceedings were stopped? No, they're still continuing. Next one, repeal of act making textual amendment in a act or regulation. Repeal shall not affect the continuance of any such amendments. If any amendment act got repealed, the textual amendments which were made to original act will still continue, there will be no effect. Imagine Companies Act 2019, Companies Amendment Act 2019 got repealed, but there will be no effect on section understood. So any textual amendments made to original Companies Act. Best example, if you see section 26 of Companies Act, before Companies Amendment Act 2019 there is a word called registration of prospectus, but because of Companies Amendment Act 2019 registration was removed and just filing was there. There is a difference between registration and filing. Registration, you have to wait till the confirmation of ROC. Until you get confirmation from ROC, you are prohibited from issuing prospectus to public. But in case of filing, you just intimate ROC, you go with the public. Getting my point? Now any textual amendments made to original act, and if those amendment act got repealed, there will be no effect with respect to textual amendments. Revival of repealed enactments. Revival does not happen automatically. If you want to revive repealed enactments, you must clearly express the statement, you know, yes, we want to revive repealed acts. Getting my point? Express disclosure is required. Construction of references to repealed enactments. Suppose in LLP Act 2008 there is a reference to Companies Act 1956. Now Companies Act 1956 is not there. Now reference is updated to Companies Act 2013. Can I proceed? Next one, 9 to 13, commencement of time, termination of time. Tell me, 30 days from date of declaration of dividend, we need to pay dividends. Now 30 days from date of declaration of dividend, date of declaration of dividend is considered in 30 days or not considered in 30 days? 30th September 2024, I declared dividend, company declared dividend. Within 30 days, payment shall be done. Now 30 days start time includes 30th September, excludes 30th September? Excludes. That means commencement date is excluded, from date is excluded, and to date is included. Clear? Computation of time. Within 21 days, file an appeal with NCLT. If the 21st day is a holiday, then you can file appeal the next day. Measurement of distances. Location A, location B. How can we measure distance between location A and location B? Horizontal distance. Straight line on a horizontal plane. Duty to take pro rata in enactments. Suppose for every 1 lakh rupee you need to pay 1000 tax. Understood? Now suppose if it is 1,50,000, it is sufficient if you pay tax of 1500 rupees. Getting my point? Next one, gender and number. Male includes female, singular includes plural. But if there is a specific disclosure, talking about only female persons, women director. Now women director will not include men director. Understood? Bullock carts. If you are using phrase bullock carts, their bullock you should not substitute with a cow. Section 14 to 19, powers exercisable from time to time. Companies Act 2013 is giving powers to central government to prescribe rules from time to time. So they can exercise these powers from time to time. There is no limitation on that time. And they can frame rules at any point of time during implementation of Companies Act 2013. Suppose Companies Act 2013 repealed. Now central government powers to prescribe rules also gets affected. So if new act is giving power to tribunal, imagine if new act is giving power to tribunal to frame rules. Now who get power to frame rules? Tribunal. Everyone. Power to appoint ex officio. Yes, I can name a person to a job, or I can name the designation of a person to a job. That means I can appoint Mr. X as IEPF authority chairperson, or I can appoint Mr. Secretary of MCA is a chairperson of IEPF authority. That means power to appoint includes power to appoint ex officio. Power to suspend. Power to appoint includes power to suspend, power to dismiss. Next one, substitution of functionaries. Instead of calling their names, instead of calling their personal names, here we are giving reference to manager, chairperson of general meeting, chairperson of board meeting, manager of the bank, RBI governor, president of India. That means we substitute with their designations. The reason, suppose now Mr. Ajay is ROC of Chennai. File documents with Ajay for getting certificate of incorporation. If I use this word, tomorrow if Ajay gets transferred and if Vijay comes to the position of Ajay, I need to make amendments to all these rules. But instead of writing their names, if I give reference to ROC, persons will come and go, but ROC position is having perpetual succession. Successors. So far powers are with NCLT to deal with one matter. Now imagine the word NCLT is replaced with central government. Now all the powers vested with NCLT gets transferred to central government. S3 movie. Have you watched S3? Surya sir movie. Singham 3. In that movie, to investigate commissioner murder, first CBI appointed Mr. Surya as a officer. But later due to internal collusion, fraud, what happened, CBI terminated Surya. Imagine CBI gave power to some other person. Now that some other person is successor to Surya. Getting my point? Which movie point? And that means you didn't get movie point. You got both points. Okay, fine. Next, chiefs and subordinates. When I'm speaking about ROC, who can issue certificate of incorporation, same power lies with assistant ROC, deputy ROC, joint ROC, additional ROC. Next one, construction of orders, etc. Expressions used in notifications, order schemes will have same meaning with respect to expressions used in original act. That means the definition of company which is given in Companies Act 2013, same definition will apply to Companies Amendment Act, company rules. Power to issue includes amendment. Power to issue rules includes power to amend those rules. Making of rules before commencement. Before commencement of a particular provision, if you make any rules, those rules will not come into force until that provision gets commenced. NFRA example NFRA was constituted on 1st October 2018. Before that day, any rules were prescribed with respect to NFRA, they will not come into force. Rules after previous publication. If you want to make changes to the existing provisions, first publish a draft bill. Best example, take LLP for example. LLP. if central government wants to apply provisions of Companies Act to LLP, first they need to prepare a draft, and the draft shall be introduced in Lok Sabha, Rajya Sabha for 30 days. Within 30 days, it may be one session or two sessions. Within 30 days, if you are getting approval, publish it. If you are not getting approval, don't publish it. We got approval subject to modifications. Make modifications and publish it. Next one, continuation under repealed and reenacted laws. Any notification issued under repealed act continue under reenacted act unless expressly provided otherwise. That means under old Companies Act 1956, we had some rules, we had some schedules. For example, revised Schedule 6, which is for financial statements. Now this act got repealed. In this place, a new act got reenacted, Companies Act 2013. Suppose if lawmaker is not giving Schedule 3, if government is not prescribing Schedule 3, then financial statement shall be prepared according to revised Schedule 6. Since we got Schedule 3, Schedule 6 is not applicable. Revised Schedule 6 under Companies Act 1956 is not applicable. That's what, unless expressly provided otherwise, whatever the notification rules prescribed under repealed act shall continue in force even under reenacted acts. Okay. Recovery of fines, it is as per the procedure of IPC and CRPC. Offense punishable under two or more enactments. Two punishments are only single punishment. Single punishment. Meaning of service by post. Three conditions to be satisfied: properly addressed, prepaid stamp, registered post. Citation of enactments. Yes, you can give reference to other acts by copying the text or just by giving a reference. Section 2 clause 20, reference in LLP Act 2008. Saving for previous enactments. Construction of acts, regulation, rules, bylaws made before this act continues unaffected even when such enactments were later amended, continued by new legislation. Suppose General Clauses Act 1887 is there. General Clauses Act 1868 is also there. First General Clauses Act which year? 1868. Second General Clauses Act 1887. Third General Clauses Act 1897. Correct? Yes. Now, even though these acts got repealed, the definitions in these acts will continue to apply along with the General Clauses Act 1897. Next one, application of act ordinance. Same effect. Central act includes ordinance. That means how you are complying central act, similarly you have to comply with ordinance. Okay.